Hello and welcome to part 5 of the mini-series Trading Problems, and this one is a good one. Let's take a look. Okay, overconfidence and underestimation of risk. Now remember, I'm solving all these problems from the perspective of time and price trading. So I'm not going to look at it like everybody else on the YouTube. I'm only focusing on these two aspects because at globaltrader.club we in advance calculate swing days, swing hours, and pricing. So how can this overconfidence and underestimation of risk be overcome when we're using time and price? Well, for one thing, as you know, when we're using time and price, we've got a definite price, a zone, and a specific time to enter the trade. That means we're not entering impulsively. It means we're not entering in some, I don't know, any place, or we're not just following a moving average or anything like that, because when you start to follow indicators, you'll get into the trade late. Okay, so we've got a specific price and a specific swing day and a specific hour for the day, all calculated in advance, and therefore you've got a specific time period and a price to trade at. So you can't go crazy after you've done a few wins, because you shouldn't, because your strategy should be according to time and price. Now, overconfidence and underestimation of risk comes to new traders, especially when they start with demo trading. They demo trade a little bit, all of a sudden they make a bunch of profits, and then they go nuts. They open up a real account, slap the trade on with a big lot size, and then face severe consequences. So let's take a look at the chart to see how time and price can really help us be more realistic. So first of all, let's take a look at how swing days and swing hours really help us out here. Now I'm just going to bring on the club membership site. And now, as you can see, as you know, I post the swing days and the swing hours. If you don't know now, you do know. What I do is basically calculate all of the swing days and the swing hours way in advance for the future. So the full month of April, for example, I uploaded it on the 22nd of March. So we know every trading day what hours are going to be swing hours or breakout hours, and what days are going to be swing days or breakout days. So here is Tuesday. So on Tuesday I already have these hours, so I cannot trade other than these hours. So I'm already restricted. I can't go crazy with the button. I need to know also a price when I'm trading with time. That's the whole idea, time with price. So according to our technical analysis yesterday, which was the 8th of April, which you can actually check the video on YouTube, I posted it up today, and we've got hours here, right? So all of these hours were posted on the 22nd of March. Okay, so this is, for example, SB 500. Now, if you take a look at SB 500, this is Tuesday here, and in fact, let me draw that out. Just bear with me. Right here, so I hope you can see the top of the chart there, but I will just point that out for you. It is Tuesday here, okay, so that's Tuesday, and Wednesday is today, the 9th of April. So what happened yesterday? Well, yesterday this was a PST hour, sorry, a PST price on the weekly. As you can see, at 5,273 we had, and let's also see what that really means for us. Now, this is SP 500 on the weekly chart. I know that my PST resistance is going to be one of those lines, so I will want to sell on one of these lines here, and it hit 34.89, which is on the weekly chart here, and 34.89 translated to a price of 5,275, as you can see here, right? 5,275.45 to be exact. And if I do 5,275 onto that line there, 5,275, okay, you will see that it is pretty much on the dot there. It's actually, let me get rid of that, because that blue line is the weekly pivot, as you can see, and this is pretty much where it is. Now look at the vertical lines. The vertical lines show me the trading hours, which I just pointed out here, and those hours were 6:15 to 5:20, as you can see here. Now these are New York hours, so I've got 5:20 to 5:30. As you can see, that's only 10 minutes. Okay, so within that 10-minute period, I am expecting the market to turn around. And then I've got here 6:20 and from 7:15 to 7:30. So during these hours, if we are at a PST price, or if we're at a technical price according to your technical analysis, if your technical analysis is good, you can definitely use it with timing. All you got to do is take it down, okay, as you can see here. So this is time and price coming together. So that's the time meeting price right there according to our PST indicator and our trading hours, and the market going all the way down. Now here is something else to look out for as well. In the notes, let's take a look back up here again. As you can see, let me get rid of all of that. I have said if the market turns, it should carry on to target 11 or closing. So up to 11 o'clock or closing, it should still carry on if the market turned around, okay? Now that information is really important, because if you have entered your trade right here, you'd want to know how far you're going to carry that on. So if you have not just a price target, but a time target, how far can this go? Then you're not afraid to let the trade run. Otherwise, most traders, what happens is it comes down, and then all of a sudden, now they make some money. They go, oh, this is a pivot zone. This is the opening price. This is the closing price. This is a support area. This is a demand area. Let's get out of the trade and take profit and run. No need. Because if you've got a time ahead of you, if the market moves in your direction, you've got enough room to cover the trade, move stop loss a little bit forward, and let it run until 11. And this is where 11 to closing is. As you can see, let me get rid of that. Okay, you can see that this is 11 o'clock, and the market really came down into that 10:45 bar. This is a 15-minute chart. Now this is 10:45 because my time zone is UTC +3, remember? So on all of these, you'll see that my time zone, if I move this up a little bit, you can see my time zone is UTC +3, okay? And this was also one for Monday, and obviously we've got Tuesday, Wednesday, we've got all the days ahead. And this is Wednesday as well for today. I've made a few notes on that as well, and you can see actually Wednesday kind of playing out here. Now add to that the swing day. So if you look at the videos on my YouTube channel earlier on, I show where I post the swing days, the swing hours, and the pricing as well. So when a price meets time, that's it. That's a bingo trade. Let's take a look at something else as well. Let's take a look at gold, for example. Now with gold, this is the daily chart, and this is Tuesday, right? Tuesday, yesterday, we had a swing day for gold. So going up, going long in gold was the way to go. And yesterday, on our daily chart, let's go back here. If we take a look, this is the 15-minute chart today. This is the closing and the 11 hour, the hour 11 and 11:45. Here it is. Okay, so this is where the market closed off, and then as you can see, the market in Asia does a stop sweep, just a slight one, and then starts going all the way up. But our bias is to the upside. We already know we want to buy. Why? Because it's a swing day Tuesday. So we are buyers. We want to go up at the trading hour. And in fact, on that day's video as well, I did say if the market comes back, we do want to buy. And I did say you might actually wait for the closing on that one. In fact, on Monday too, let me see. Here we are on Monday too. I did say market might be a good level during closing, and same thing yesterday. And this is Monday. I said market might be at a better level at closing, as you can see there, right? Hopefully you can. All right. And this is Monday trading hours at PST levels. Market going all the way up into there. Trading hours yesterday coming back down into the closing, 11:45 closing time there again, and then market going up, and we had that target there for a start again, and then we've got obviously that one there at the top there. Okay, so weekly pivot, I like to keep that in mind. Okay, and that's how we traded it. So knowing time and price, okay, as you can see, is important. Now this is interesting. Look, this is also a good place to kind of like manage the trade. Now I've got trading hours here on a Wednesday. So what does that mean? Well, if I went long, I definitely don't want to be mucking around and staring at the screen, because this zone is now tricky. I'd probably want to move the stop up, take some profit. Even taking profit here is not a bad idea, simply because at the end of the day, that swing day of yesterday from the low went back up, and we're at a level now where they sold off on Monday. You see that? Okay, so here it's not a bad idea to either move your stop forward, take profit. If you want to go long again, wait for the trading hours to come to a decent price, like the high of yesterday, or there's a bit of a gap here. If you want to wait for the gap closure and then buy, that's also okay. Completely up to your technical analysis style. At globaltrader.club, I teach 5 different styles of technical analysis. And by looking at the market from different perspectives, we always know what our bias is, what our targets are, stop losses are, and we always have a different way of looking at the market. So we never miss out on the technical analysis, because if you're just using one method of technical analysis, it's not going to work out for you. So make sure you get a few techniques under your belt and understand them really well. Also, let's take a look at the euro dollar. Now with the euro dollar as well, we had a swing day Tuesday, and because the market was down, as you can see, Tuesday being a swing day, the market actually bought right on the PST. You can also check the video on this one, which on Tuesday was 1.0902. all right, that was the daily PST level on Tuesday. Now today it's a bit different. Why? Because the daily has to change daily, because market conditions are changing. However, though, yesterday that was the PST level. Now look what happened. Market comes to the PST price at the trading hour. Isn't that great? What does the market do? They do the thinkable. Okay, trading hour, it's a PST level, timing is good, you buy. Okay, as you can see, the market has already come to my target here. I had posted that before. There's another target up there, but this 1136 was already done. How do you know it was already done? If you watched the previous videos, you'll see that actually we were short on the euro dollar at 1136, because the monthly resistance of 58.73 on the PST is 1136. So logically, when the market does come to 1136, which it did do on last Thursday, guess when? At the trading hours. Okay, right there. Okay, so that's the trading hours there. Market is there. Market sells off all the way down, as you can see there. Let's get back in here. Let's get rid of that. So from all the way there on Thursday, it came all the way down into Friday, and Monday opening was down here, as you can see. So that actually, Friday was also a swing day, so selling the highs at trading hours was also great, because if you take a look, okay, so let's take a look again. This is Friday, right? And Thursday, this is Thursday. So market makes a high, it comes to the monthly PST at the trading hours, sells off. Now Friday, it comes to the trading hour, it's retracing up. Okay, nice retracement up, and then a big sell-off, comes back up here at trading hours in New York. Sorry, this is London, all right, and this is New York. Comes back at the trading hours to a retracement level where they sold off before, filling in the gap and selling off all the way down to the trading hours of the closing, as you can see here. So it just went boom, 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 all the way down. They sold at trading hours from the highs. So getting in at a high price when you're selling is obviously what we'd like to do, and buying cheap is what we want to do. So this week, when it was at the PST price on Tuesday, which was a swing day, it was obviously the way to go. and that's your trading hours going all the way into there. As you can see, with a situation like this, you can hold the position until the next day. Why? Because we've got a target. We've got that target of 1056 from before, and then the market has gone up into there from a trading hour and a PST price. So that is like a golden opportunity where time meets price. It's a bingo trade. It's the best trade ever. All right, and that's how it is. So on Wednesday, we'll see how things will pan out. Let's see on a Wednesday. Let's pull it down a little bit and see. As you can see here, we've got 315, 340, 420. So this zone is going to be important for us. And the time here is right now 1:19 my time. We had 12:45. Let's see what happened at 12:45. 12:45. Now the platform is currently the same as mine. So 12:45. We are right there. Okay, and it's a PST level here. What time was this one? Let's see what the peak was. That's 9:45 in the morning. Let's see if I had anything at 9:45 in the morning. No, I didn't have anything at 9:45. I had 10:40 to 11:20. So where is 10:40? 10:40 is there, and 11:20 is there. All right, so the market makes a retracement into 11:20 there. London buys it into the next trading hour. Okay, it's a price level for us. Selling here is good. Stop loss should be just above the high there. Okay, and that's about it. When you so the stop loss should be just above the high, around there, let's say. Okay, so this would have been the sell price at about 10.55. Okay, and you should cover the trade there, which is enough to cover your stop, and more than actually enough to cover your stop. But you can target it down. Okay, now also we know the next swing day for the euro dollar as well. So knowing that, we can buy into this move. If the market comes into a decent hour when we're trading, like on a pullback, like there's a bit of a gap here, if we come back down here maybe, and then the market goes up again, we can get in if it's a trading hour. The problem with today, actually it's a good day because I can show that as an example as well. Now the problem with today is, let's take a look at the hours and I'll show you. Now look, today I've made a special note. After 420, I don't have anything for turns in the market, right? So I'm thinking to myself, well, if I don't have anything, let's push this up a little bit. Okay, so there's your 420, right? This is Wednesday. In fact, let me make this a little bigger. Can I make this a little bigger? There we go. All right, here we go. So what's happening here? As you can see, I've got 420, and after 420 I don't have anything, but I've made a note. I said keep in mind 7:05 to 7:30. That's my time in the evening. Okay, so that's going to be in the New York session. So I've told them to make sure, if the market is going in a direction, it should flow, but keep an eye out for 7:05 to 7:30, because something there might happen to maybe stop the market, stall the market, maybe to turn the market. It's not very, very heavy, but still something to keep in mind. Now, if I know that already, and if I enter the trade, let's say at 3.5 to 3.40 or like 4.20, right? UTC plus 3 time zone, and if the market goes in my direction, I can at least say to myself, well, you know what, I can keep this at least for like 3 hours and see how we're going. All right, and if the market keeps pushing, because there is a potential to do so all the way into the Asia session, okay, then what we might do is just let it go. All right, but knowing this information beforehand is obviously very important. And the same thing here, knowing yesterday that if it turns, it should carry on until 11 o'clock or closing. So knowing that information, I'm already safe. I'm not trading with a lot of fear. You see what I mean? You could do this the same thing for indices. In fact, let me show you Bitcoin as well, because all of them really bounced off those PST levels. The Nasdaq, the Dow Jones, SP 500, euro dollar off the monthly, gold yesterday, euro dollar yesterday on the PST. So let's check out Bitcoin as well. Now here's Bitcoin. Now with Bitcoin, let's see what we've got here. I think we had a swing day. Okay. Yes, we had. We had Tuesday and Wednesday swing day. So yesterday and today. Now this is the weekly, right? So I go into daily. Now Tuesday and Wednesday. And look what's going on. Today is a Wednesday. Market bounces off on where it bounced off on Monday. So if I know Tuesday, Wednesday, swing day, if the market is down, I don't want to be selling at the lows, do I? No. So what do I do here? Let's put a up bar. All right, let's put an up arrow here. Now these price levels, as you can see, I already have on the daily. You see this 27.60 for today? That is 75,387. So 75, let's check it out. 75,387 is about here. All right, so it's pretty much at the bottom of the market there. Did I have a time? It's Wednesday. I don't think I had a time for that on Wednesday. No, so there's nothing to do. All right, so I've got nothing to do until 10:40 to 11:20. So let's move this to 10:40. Well, what do you know? This is your 10:45. That's your 10:30. It's a 15-minute chart. We're on a daily pivot. It's time and the market is selling. Okay, so now what do I do? Well, this is good. If the market was down, Tuesday, Wednesday being a swing day, if the market is down, I don't mind buying at a good price. Okay, because it's a swing day and the time price match is good. If I was to go into this zone, okay, if the time was right, I've marked these lines in before, and you can see that's also a PST level on 74,493. If the time was right, we'd go long, but you see on this one it wasn't. I didn't have an hour here, but look, this is interesting. The market's got a swing hour at a intraday high where they sold off. So this has got room to maybe retest lower lows. So what I don't want to be doing also on Wednesday, the last trading hour is at 4:20, and from 4:20 onwards it's a little tricky. We don't know what's going to happen. We'll have to wait and see where the price ends up. So already, right, I've taken all the anxiety, the rush, the cockiness, the overconfidence out of the game, because if price and time do not match, you do not trade. But yesterday, for example, it did. Look, we had 80,686 yesterday. If you take a look at your daily, all right, there's nothing to see here except that red line, but more importantly to see here was this PST level here. That's 42. This is a weekly chart, so it's pretty strong. We had a price of 80,694. That's where this 80,694 comes in. Okay, if I was to actually make this exactly 80,694, it's not going to make a lot of difference because of Bitcoin's higher price. Okay, as you can see, it's pretty much on the dot there. But look, the market comes to the weekly here, right? The weekly PST. But I don't have a trading hour here. There's nothing to trade here, so I can't do it. But it's come to the PST level, and it's a weekly level. If I didn't have timing, I would say, yes, sell it, no problem. But look what happens. Market comes into a trading hour just in pre-London opening. Market goes up into a trading hour right underneath the PST that it did, okay, and then it just falls off. Okay, comes all the way down into 75,396, which is logical because if you take a look, that's on the daily down here. All right, and it's all good, it's all fair game. All right, so as you can see, by knowing the monthly price, also the monthly here is a 56, 75,979. 75,979 was slightly up here. 75,979, whoops, 75,979, just around here somewhere. Okay, all right, and that's also what the market did on a trading hour, pretty much, as you can see, and then bounced up from there. So knowing these PST levels, matching them to an hour during the day, a time which you won't find anywhere else, only at globaltrade.club, can really minimize your risk. It will also overcome your overconfidence because you're bound by shackles of price and time. Okay, and if you keep trading that way, you can get cocky afterwards. Have a good day.